Hey everyone, welcome to Spy Trader. It's 6 p.m. on August 14th, 2024, and I'm your ever lovable host, Jimmy the Bull Thornton. We've got a lot to cover in today's episode as we dive deep into the latest happenings in the S&P 500 landscape. So, grab your favorite beverage, sit back, and let's get into it. First up, let's chat about some exciting and some might say puzzling moves in the market today. The latest U.S. inflation data revealed year-on-year core consumer prices rose at their slowest pace since early 2021. This nugget of good news has calmed investors' nerves and fueled optimism that the Federal Reserve might finally cut interest rates next month. In fact, markets are already pricing in a 25 basis point cut in September, with expectations that we might see a total of 100 basis points drop by year's end. Yup, you heard right, folks, half a point cut over the remaining two meetings of the year. In case you missed it, the S&P 500 saw a bounce, rising 0.4% for the day, marking its fifth straight day of gains. Look at the financials, energy and tech sectors leading the charge. It's as if everyone just got invited to the same dance party. The VIX, which we commonly refer to as the fear gauge, dropped to around 16, down from a recent spike above 65. So, breathe easy. The market isn't so scared anymore. What's happening on the global front? Good question. Asian equities also showed some love, with Japanese stocks celebrating better than expected GDP data. Meanwhile, Tencent in China didn't fare as well, despite posting a solid net income. Their US-listed shares dipped, proving that even tech giants are susceptible to wider economic uncertainties. One interesting tidbit is Fed Bank President Austin Goolsby's recent comments. He hinted that labor market conditions could soon be more critical to the Fed's decisions than inflation metrics. That's a big signal, folks. It means all those employment numbers coming out should be on your radar. In the political arena, remember to keep an eye on Japan. Prime Minister Fumio Kishida is stepping away from the Liberal Democratic Party leadership election. Political shifts always have an uncanny way of stirring market waters, don't they? Now, to the million-dollar question, what should you do with all these market cues? Here are my 2 cents. 1. Sector exposure. If you don't already hold positions in the financial, tech, or energy sectors, now might be a good time to consider them. Lower interest rates historically give a nice boost to these sectors. 2. Watch the data. Keep a close eye on upcoming jobless claims, retail sales, and consumer sentiment data. These figures will be critical in judging how the market performs in the short term. Number 3. Cautious optimism. While things look rosy now, remember it's a tricky market. With geopolitical tensions still simmering, particularly in Asia, a dose of caution is warranted. And just for laughs, here's a joke for you. Why did the stock market go to school? To get a stock education. Ha! Okay, maybe I should stick to stock picking and leave the stand-up comedy to the pros. All right, folks, that's all the time we have for today. Thanks for tuning in to Spy Trader. Be sure to join us next time as we continue to break down market trends, share insights, and help you navigate the financial landscape. Until then, keep your trades smart and your gains high. Jimmy the Bull Thornton, signing off.